Assalamu alaikum. This is our financial and managerial accounting course, so lecture 8. In our previous lectures, we have learned about financial accounting and some basic things about financial accounting. We also learned about time value of money, some cash flows, and financial accounting stuff. And from now, uh, in the upcoming 2 or 3 chapters, we'll learn about some basics management accounting things. Starting today with the introduction to management accounting. Today we'll be learning the definition of management accounting and its importance, uh, which will also cover the role and key functions of management accounting. So starting with the contents in a summarized form, which are the definition and importance of management accounting. We will learn about the basic difference between financial and managerial accounting, and finally we will learn about some managerial skills and the position of management accounting today in the industry, inshallah. Moving on to the overview of management accounting, we say management accounting is a field of accounting that provides economic and financial information for managers and other internal users, which also focuses on the internal needs of an organization, which is used by managers to make informed decisions and strategic decisions. Management accounting also assists managers in decision making, in planning and controlling business operations. So defining the management accounting from a book perspective, we can say management accounting involves the collection, analysis, and interpretation of financial and non-financial data to aid management in planning, directing, and controlling business activities. It goes beyond traditional financial reporting. How? Traditional financial reporting only reports to the external users and reports external users and internal users too, but they only give some specific ideas about how company is performing, but they don't give any budget issues or any cost issues at all. But management accounting provides information that is relevant and timely for managerial decision making, so that the cost becomes less and we can do more and more profit. Moving on to the actual role of management accounting, uh, which is to support the managers in making informed decisions that contribute to the organization's success or achieving the goal. Its objective include providing relevant information, facilitating planning and control, supporting performance evaluation, and assisting in cost management. So I'm repeating again, the main objective of management accounting is to provide relevant information, is to facilitate the managers for about controlling and planning, supporting performance evaluation, and also assisting in cost management. So let's discuss about the basic key functions of management. We have already talked about it: decision making, its budgeting, its forecasting, its cost management, supporting performance evaluation, supporting planning, facility planning. All these are management functions. But to summarize, to say the basic functions of management accounting is to prepare budgets. They prepare budgets, they forecast, and they make financial analysis, which involves determining cost and cost data analysis, determining product costs, and supporting pricing decisions. And also, they provide insights into performance evaluation and contribute to strategic planning and decision making process. So now let's move on to our importance of management accounting, which have 5 basic importance. The first one is to support the decision making of the managers. The second one is the planning and budgeting. The third one, performance evaluation and control, and the fourth one, cost analysis and management, and finally the ultimate goal is to enhance the business performance. So let's start with the decision making support. Management accounting provides data and analysis that helps manager make informed decisions related to product offerings, pricing strategies, and resource allocation, which assists in identifying profitable project identification and cost saving opportunities and potential risk, leading to better decision outcomes. So all of these five things: product offerings, pricing strategy, resource allocation, profitable project identification, cost saving identification, all of this comes from data and its analysis. If you do not analyze your current situation, you cannot offer the products, you cannot strategize your pricings, you cannot allocate your resources properly, you cannot identify profitable projects, or even you cannot identify cost saving opportunities. So the ultimate goal are these five: to enhance the performance. But to do those things, management accounting provides data and analysis that helps manager to do all these things. So in these ways, management accounting supports the or assists the managers in decision making, in better decision making, and so the outcome is maximized. Moving on to the planning and budgeting, the management accounting aids in creating budgets, setting financial goals, outlining the resource requirements to achieve organizational objectives. So if you create a budget, you can then set a financial goal that I want to achieve this much profit in a certain period. So if you set a goal and you create a budget, then you can outline the resources that you need, that you require to achieve those goals and to meet the budget. And this will allow the managers to plan effectively, to allocate the resources efficiently, and finally monitor the progress towards their target. So in this step-by-step process, the management accounting plan assists the managers in planning and budgeting to achieve the financial goal and to achieve the organizational goal of the organization. Then management accounting helps evaluate the performance of departments, projects, and individuals by comparing actual results with the planned targets. The targets that the organization or the managers targeted at the very beginning of the year, it will be evaluated by the management accounting with the actual results, what they keep their records, and they can evaluate the performance of departments, single departments, individual departments, or as a whole departments, or individual workers or employees, or even individual projects can be evaluated by this process. It will enable the managers to take corrective actions if required, and they will they will implement control measures if necessary, and finally to ensure the organization operates efficiently. Those things can be put in place to achieve efficient operation. Management accounting does cost analysis and obviously cost management for the managers, focusing on the analysis of various costs associated with production and distribution of goods and services. It helps to identify areas of cost inefficiencies, and also supports cost management strategies for optimizing resources. Finally, by providing relevant and timely information, management by providing relevant and timely information, management accounting contributes to the overall improvement of business performance and competitiveness. Inshallah, in the next class, we'll be learning about the basic differences between financial and management accounting, where we will talk about the primary users of reports, type and frequency of reports, purposes and contents of the both kind of reports, and what should be the verification process of these two things. And we will be learning what skills do managers need to succeed in their career. And finally, we'll be learning about management accounting today. What are the role of technologies in accounting, and emerging technologies, emerging trends and innovations, and finally sustainability and environmental accounting, which is a very significant topic in this age. And finally, some ethical considerations in this topic, inshallah. Assalamu alaikum wa rahmatullah wa barakatuh.